What's up, penny boys and gals? It's your boy, What the Duck here. And today we're going to be going over the basics of trading psychology, especially geared towards following penny boys alerts. However, this video should be able to help anyone who's new to trading, even if they aren't a part of the penny boys alert service. However, if you aren't in our alert service and you want to be, so that you can make some great profits such as these, we got IBIO at 330% gain. You see AIM, not the messaging service, at a 75% gain. HTBX, Tesla, we got some Apple calls, and some other great alerts as you can see from our alert service. This is from Austin, one of our great alerters. And of course, we're not going to leave Lee out of it. He also has some awesome winners as well. TNXP for 175%. We got JE for over 250%. And as you can see, there's so much more. So make sure that you join us at our Discord, which is discord.gg/btpenny. That's discord.gg/btpenny, so that you can partake on our great raffles, alerts, and so much more. All right. So finding success in the stock market is just as much about having the right mental mindset as it is about being able to follow charts or do fundamental analysis. Think of the stock market as a cage, like a UFC cage, and you're a fighter. There are fighters who specialize in their ground game. There are fighters that specialize in boxing. There are fighters who are knockout artists, and so on and so forth. The same thing goes for trading. There's options traders, there's day traders, swing traders, and so on and so forth. It's important to know what you want to do and what you're good at doing. Maybe you're not very patient, so day trading might be for you. Maybe you have a high risk, high reward mentality, so maybe options trading is best for you. Or maybe you work a 9 to 5, or just are patient and like to, work out or do something else during the day as opposed to just staring at the screen. So maybe longer swing trades might be best for you. That way you don't have to stare at the charts all day. No matter what you choose, stick to it. Go hard with it. Watch trading videos, do trading research. Like I said, go hard. Because it's good to have a certain technique that you specialize in, just a technique that you can fall back on. Whether it be options, swings, or day trading, or even dividend trading, whatever it may be. A fighter that specializes in boxing, he has that skill set to lean on when they really need it. When there's that 1 minute left in the fight and they just need to give it all they got, they can rely on their boxing during crunch time. But they also learn how to grapple, they learn how to kick, they diversify their skill set over time. But when they need it, they have those boxing skills to fall back on. You don't want to overload your brain with options trading, day trading, swing trading, dividend trading, and everything else that there is to learn by doing all those videos at once. It's good to have all those in your trading arsenal, but first figure out where you want to start and make that your fallback. Make that the type of trading that you can rely on when the market goes to shit or your portfolio starts to drop. A fighter can have the best technique, the best right hook, the toughest ground game, but if he doesn't have the mental or psychological mentality that is needed to step into that cage, well, then he's going to get eaten alive in there. Same goes for trading. Fear and greed. Fear and greed is what kills traders. You need to learn to overcome this barrier. Just like a fighter needs to get over the fear of getting hit, a trader needs to get over the fear of losing money. Getting hit is just part of fighting. Losing money is part of trading. It's going to happen to everyone, but how you do it is what matters. So set a stop loss to protect your portfolio. That way when you lose, you're only losing an amount that you feel comfortable losing. A fighter doesn't leave themselves wide open to a punch. That's how they get knocked out. Going into a trade without a plan for what happens if you lose is a good way to get knocked out. Or with trading, it's a good way to lose all your money. A fighter might take a few punches, they might miss a few jabs, but they keep their hands up and they protect themselves. And eventually, they'll connect with that knockout punch and they'll win the fight. The same thing goes with trading. You might lose 2, maybe even 3 trades in a row, but as long as you aren't getting knocked out by those punches or by those trades, then you're still in the game. And that way your next punch or your next trade can be that knockout, that right hook, that 50, 75, or 100% runner. You might lose $5 to $10 on 2 trades before that, but then the third trade, you can make $200. And that's pretty good. You can't do this, though, if you tank your portfolio on those first 2 trades, or if you get knocked out with the first 2 punches. That's why you have to protect yourself with stop losses. It's like a fighter keeping their hands up while they punch. Not every trade is going to win. Not every punch is going to connect. But you're never going to get that winning trade, or you're never going to get that knockout punch if you don't swing, or if you don't go for it, or if you're too afraid to trade. If you keep your hands down, or if you have poor technique, which is true for most beginning fighters, you're going to get hit, and you're going to get hit hard, and you're probably going to get hit a lot. But you can't give up. You got to stick with it, and you have to learn from your mistakes. You need to keep fighting, because if you're too afraid to fight, you're never going to win, and you're never going to learn from your mistakes. So definitely learn from your mistakes, but don't quit because of them. One thing about trading psychology is getting over the initial hard part, or as they call it, the hard part, which is the beginning process, which is learning, basically. That's why a lot of people paper trade, or in fighting terms, spar. It hurts a hell of a lot less when you're getting hit while wearing a protective helmet on your head. And it's a great way to learn. If your plan isn't working for the first couple trades, it happens. Don't give up on trading. Maybe don't even give up on your plan. A lot of new traders try to tweak their plan too early before they even give it a chance to play out. You got to give your plan time to bloom. Speaking of a plan, that's a big part of trading psychology, is having a plan, or a game plan. Fighters study their opponents, they plan out how they're going to pace themselves or what they're going to try to focus on in a fight. You need to do the same thing while trading. Have a plan, know where your stop loss is going to be, know where your profit taking is going to be, and know why you're setting them there. Have a plan about what you want your portfolio to look like. How many trades do you want to get into for a certain day, week, or month? What types of trades? What sectors do you want the trades to be in? Write your plan down. Keep a journal or a trade notebook, or just notes in your phone or a spreadsheet. By planning ahead of time, you can take out some of the emotions of trading. Which brings me to my next point. Don't be an emotional trader. It's easy to see 100% runners on your Webull's top gainers list and want to jump right in. But like I said, it's easy. Good things aren't easy. Winning isn't easy. Tanking your account, well, now that's easy. Losing, that's easy too. But trading isn't easy. So you have to be smart about it. You have to rely on your plan and learn from your plan and know when to tweak your plan. But stick to it until it comes time for tweaking. Once you veer off that course, then you're turning from smart trading or planned trading to emotional trading. And that's when you get yourself in trouble. One big emotion that comes to mind is greed. Pigs get slaughtered, as they say. Don't let greed bring about FOMO, which is fear of missing out. If a stock has already run or ran for 100%, congratulate the people in it, but don't chase it. You don't want to jump into that unless you have a legitimate reason to believe that the stock is going to keep going up, and getting into it is part of your plan, or at the very least you have a plan for getting into it and out of it. That's a big thing too, is knowing when to get out. Don't chase it. That's like throwing haymakers with your eyes closed. Sure, you might get lucky and connect with one of those wild punches, but 9 out of 10 times you're going to miss, and you're going to leave yourself open to getting hit by a knockout punch from your opponent, or being taken down to the ground and submitted. Smart fighters are patient. Smart traders are even more so. Greed comes in many forms for trading. It can be trying to chase a stock, or it can be trying to squeeze too much out of one of the stocks you're already in. If your stock has already reached your target that you planned out ahead of time, don't be greedy. I'm not saying that you have to sell no matter what, but at the very least, set a stop loss to take profit. That way, if it starts to tank back down, you can at least still exit the trade with great profit. Nothing is for sure, and the market is random. Just because a stock is rocketing up doesn't mean it's going to continue to rocket up, even if it's based off of news, even if it's the best news ever. Have you ever seen those videos of the bike racers who celebrate too early before they even reach the finish line, and they fall on their ass before they actually can pass the finish line? Well, that's what happens when you're greedy. Also, if you see profit, there's nothing wrong with taking it. 10% gains, they add up. A lot of the best traders out there just go for quick 10% gains, 10% gains, 10% gains, and they make a lot of money. So set out guidelines based on your risk-reward tolerance, and make that for when you want to enter a trade and when to exit it. Set a profit target and put a stop loss in place to take emotion out of the process. You also might want to decide which specific events, such as positive or negative earnings, releases, news, or reverse splits, should trigger a decision to buy or sell a stock. This does take experience and learning from your past trades and seeing how certain events affect the market. So take notes on your past trades and learn from them for the future. This is your hard-earned money that you're trading with, so be smart with it. Don't put money into the market that you can't afford to lose. And don't go into a trade blind. Do a little bit of research before entering a trade. Find out the recent highs and lows were. Find what type of company it is. Look at what others are saying about it. I'm not saying that you need to be an expert to do basic due diligence, because that's why we call it basic due diligence. So you can just do some little basic due diligence, new trader due diligence, I guess if you want to call it. And one last thing, no matter how good a trader is, they always have something to learn. Even Conor McGregor still tries to learn new things and tweak his game plan. You're never going to learn everything there is to know about the stock market. That's impossible. Nobody does. There's no such thing as an expert. So keep doing research, keep watching the videos, keep critiquing yourself, and there's always something you can do to further your trading career. And one way of doing that is by joining the Penny Boys Alert Service. Here are just a few of the profits that we took today. So we had IBIO, it was up to 273% upon posting, and it actually went up more from there. So that's one of our alerts, and if you want to get in on that, you can join our Discord at discord.gg/btpenny, or our Facebook group listed right below it, which is facebook.com/groups/btpenny. We got JE, Just Energy, a nice 150% profit. AIM, 82% profit from the Penny Boys. HTBX, another 65% profit. So not only will you have alerts to follow, people to ask questions to, raffles to keep you from going crazy during the red trading days, as well as trading classes, but you'll also be a part of a great trading community. And in this game, the stock market game, there really is strength in numbers. And you're much better off listening to the Penny Boys community chats as opposed to the Webull comments or StockWits. Trust me on that one. We do have a new Traders Learning Center that we just put up today. So you can see some of the stock trading lingo. There's more than 8,000 stock trading terms and their definitions. You just click that and you can look up pretty much any lingo, anything that you don't know about the stock market as far as the talk goes, or the stock talk goes. We also have some videos from Austin. This one's a 5-minute video just showing how to find some long-term supports and resistance. We have the YouTube channel where you can find all of the past classes so that you can complete the homework and the tests. We do give out discounts for the tests for the best answers. We have our Facebook videos, which we have a lot of charting videos on there from Austin as well, so those are good to check out. As well as some tips and tricks like how a cash account works for Webull, what the PDT rule is, and a few more trading tips, as well as how to find alert info, like how to search a channel for certain alerts. And we'll be adding to this channel, to this new Traders Learning Center. We're going to be adding to that throughout the week, month, the year. We're just going to keep on adding stuff to it so we can all learn together. So we're going to go over some of the homeworks now. So our post homework for charting class, each answer is going to be getting 10 raffle tickets for the best answer. We'll just do that really quick first. So Enigma is going to be getting 10 tickets for question 1. In your own words, what's the number one thing you learned about charting from the class? They learned about the different uses and time periods for the SMA and EMA. EMA being more useful for short-term trends, and since it's more responsive, so that's weighted to recent price fluctuations, and SMA is better for long holds, which I use as a 10, 50, 180 time period for the moving averages. Pookie's Revenge is going to be getting 10 raffle tickets as well. What can the indicators be used for? They can summarize price action over time, relay information about strength, momentum, and direction, as well as help predict future movement. Nick2086 is going to be getting 10 raffle tickets as well. That's Nick2086. And actually, I'm sorry, these are all going to be for one raffle ticket. So we did change up the raffle system to make it a little bit easier to track. So this will all be worth one raffle ticket, which one is actually a lot of raffle tickets for this new raffle. So Nick, what can the indicators be used for? It cannot be used to tell the future because anything can happen. And it's also off of that, the indicators are all based off of past price action, which is why it can't be used to tell the future. Pookie's Revenge is going to get another raffle ticket for question 4. What is a self-fulfilling prophecy mean? It means that the more people believe in something, such as a trading signal, the more likely it is to be used and have influence over price action, which is very true. If everyone is looking at the 180-day moving average as a resistance or as a support, if everyone uses it, then it's going to be the resistance and support because all the traders are using it. And that's what that means. And our last winner is Lex, L-L-E-X, for question 5. What's the difference between the EMA and the SMA? The SMA is a basic average of the cost over X days and is used for longer trades. EMA is a weighted moving average, which is used to identify movement faster. This is preferred for short traders, which is definitely correct. So like the big difference is that EMA is a little bit more for the short-term trading, whereas SMA is for longer-term resistances and supports. And for our ETF homework, I'm going to be giving raffle tickets to Nick2086, as well as Ranjan Naxer, and sorry if I cannot pronounce that, and as well as Pookie's Revenge for having some great answers. So here's one. So what does ETF stand for, and what are they? ETF stands for Exchange Traded Fund, and it's a compilation of instruments intended to represent a portion of an index. They can be traded similarly to the way stocks are traded. What is an inverse ETF? An inverse ETF functions opposite from the ETFs. It's an inverse of. It moves in the opposite direction. So when the ETF goes up, the I ETF goes down, and vice versa. So you have your ETF for oil, and then your inverse ETF will go up when oil goes down. Do you buy an ETF like a stock? Yes. What is ETF JETS? JETS is an ETF which summarizes the airline industry. And what is ETF SQQQ? SQQQ is a leveraged inverse ETF that summarizes the NASDAQ. So that's a inverse ETF, which means that when the NASDAQ goes down, SQQQ goes up. So it's kind of like shorting the market almost. And these are all some great answers as well. Group of airline stocks, as you can see. And then the Webull homework as well. They're also going to be getting points. This is going to be 3 raffle tickets for the best answers. And we're going to give those 3 raffle tickets to Ranjanexer. So that's going to be 3 more. What is night mode? It's basically a black background for Webull. So you have your night mode is your black background for Webull, and regular mode is white background. Question 1 was, when you're in your watch list, what is the little blue box next to your stock mean? It means news events. For percent turnover, I'm going to go to Pookie's Revenge answer here. It's going to be a measurement of how many shares can change hands over a period of time. What do the advances and decliners show you? Advances stocks going up, decliners with stocks are going down. As Pookie's Revenge said the same thing, so you just distribute the distribution of stocks that make the most gains and the most losses. Pookie's Revenge is also going to be getting 3 tickets for that homework as well, by the way. And then what is the following list? So the following list is actually, if you're in your Webull and you go to Explore and you go to your Explore lists, you can add any of those. It's either oil and gas drilling. You can do recreational products. You can do it's just different categories, and you can add one of those lists to your Explore list. So that's what an Explore list is. And then we also have our test. And this will be the best the biggest score will get the discount. We also have some charting questions on that, so make sure you message me your answers. And we're going to be changing up how the homework works going forward. So there's going to be no homework tonight. I'll let you finish this test. So hopefully we get that done. But yeah, so that's that. That's the trading psychology class. I hope that y'all enjoyed it. And if you aren't already, be sure to join us in the discord.gg/btpenny so that you can join me, What the Duck, and make some bread.